So taxes typically don't stop when your paycheck does. In fact, in retirement, when you tap your nest egg for income, it comes with a whole lot of rules and a lot of opportunities too. My guest is Kim Strosnider in Marysville, Michigan. So Kim, when someone retires, the assets that they've accumulated now has to be turned into income, and that creates a tax liability. Can you talk about the 401k plan?
Okay, yeah, there's a lot to talk about there. Well, first off, when you retire with your 401k, it is always best to roll it into an IRA because it does give you more options. However, if you're still going to be working and you intend to work past the age of 70, then many times we have to think about whether we should have you roll it into an IRA or not, because then you're not subject to the RMD, required minimum distribution requirements, if you're still working. But there again, the 401k, once you retire and you have to take distributions, especially if you have a pension, by the time you have a pension and you take Social Security and then you take your RMDs on top of that, it can be quite the tax bite. So there are some things that you can do to go ahead and try to minimize that tax bite. For instance, many times clients that retire in their 50s because they're maybe 30 and out and they've been at the same place for a long time, we might suggest they actually start taking distributions in their 50 by using a strategy the IRS allows called a 72T, thereby reducing the amount that they have to take when they're 70 and a half, plus getting a lot of that out before they have to turn on their Social Security. And when you look at the overall picture, sometimes it's best to get that money out early rather than later.
Well, Kim, I'm sure you run into this from time to time. Clients actually surprised to find themselves that in retirement, they're actually in a higher tax bracket. Now, how does that happen, and then how do you manage that?
Oh, absolutely they are. I say most of my clients are in a higher tax bracket, and that's why we have to address it. Once you retire, most of the times your homes are paid off, your children are gone. Unless you're in that sandwich generation, you've lost all your deductions. And most people are just taking the standard deduction and their exemptions. And now many times they're making more income than they did while working because they have their pensions, if they're lucky enough to have one. That's kind of going by the wayside, but they have their pensions, then they have Social Security, and then on top of all that, they're required to take distributions at 70 and a half. So it can be quite a taxable situation for them.
So Kim, that leads me to my final question. How can you use life insurance to create tax-efficient income? Okay,
well, that's like one of my favorite topics. So again, I won't get overcomplicated with that because of the fact that it can be complicated, but basically it's a matter of taking money out of your qualified accounts over a period of years. Let's just say maybe you're taking $50,000 a year out for 4 years and transitioning it into a life insurance policy. Well, normally, if you want tax-free income, you need to do a Roth conversion and you need to find those taxes from other money. When you do this, you're actually allowed to take a policy loan to pay the taxes the following year. And then you have the option later on to turn on a tax-free income, or maybe you can take tax-free loans or short-term loans, depending on the type of policy that you go ahead and take out. The other thing that I like about this is that you can get a true long-term care benefit with these life insurance policies. With annuities, you can get kind of a rider that helps pay for it, but with insurance, you can get a true long-term care benefit, and that's really strong. But it's a great way to generate tax-free income and have the taxes paid and not coming right out of your pocket, not feeling that pain.
Kim, thank you for sharing your time with us today.
Thank you for having me.
My guest has been Kim Strosnider in Marysville, Michigan. This is Retirement News Online.